Hi there, this is Kishore Mohan and welcome to my YouTube channel. So, today's category will be on wealth and my topic is top 3 mutual funds for youngsters. Yes, for youngsters around who are in their 20s, who just joined their job, it's for them, exclusively for them. Who are in 30s also can try, but it's more exclusive for youngsters. So, let's get into the video. So, as I said, the top 3 mutual funds. So, what will I be covering in today's video? So, first, I'll be talking about what are mutual funds, types of mutual funds, and my suggestions about the mutual funds, and what are the key parameters I choose to select mutual funds, and examples. So, these things will be covered in today's video. What are mutual funds? So many of you are having see okay what is okay there are a lot of things going on about mutual funds. So what exactly is mutual fund? It's basically a trust or asset management company who collects money from number of investors who have a common objective. So this company appoints someone called as a fund manager who basically manages this fund given by many investors. So this the asset fund manager basically deploys this money or invests this money in equity, bonds, debts, a lot of other in market instruments. So that's what mutual funds are. Thus, the income or the gains generated from this collective investment is shared proportionately among all the investors who have invested in this fund. So, obviously, there is a fee deducted by the AMC for managing a fund. So, that is what is about mutual funds and how they manage the assets. Next, types of mutual funds. I'll tell the names of 5 major types of mutual funds. 1. The equity mutual fund, the debt mutual funds, hybrid mutual funds, index funds, and solution oriented mutual funds. My suggestions for mutual funds. I have suggested this because thinking in mind the youngsters of this current generation who are in around their 20s and just entered 30 and who are in a good job. So I have divided into like little safer and one other category is little risky category. So the safe category, the Nifty 50 index fund. So this fund is basically represents the Nifty 50 index, the top 50 companies in our index, Nifty 50. So the asset management company or the fund manager in the company doesn't have to think so much like which company should I invest, blah blah blah, but he directly invest in the Nifty 50, the top 50 companies as per the proportion mentioned in the index. So this is much safer equity fund, and obviously our economy will not go down. So when you see a long term for around 15 to 20 years, index fund is one of the very good funds for youngsters who are in their 20s, 25 around age. If you invest now, when you become like 45, you will have a huge returns. So that is one Nifty 50 index fund. Second, I told you little risky ones. So basically, um, we know the after the pandemic, the pharma is a very good sector to invest, and also the technology. We thought people will lose jobs. Yes, they lost job, but how technology adapted, work from home. So this is a very good theme, very good sector. So they'll adapt, they'll keep on going. There is a great boom coming up for pharma and technology. So my next session is the technology fund and the pharma sector mutual funds. So these three, Nifty 50 index fund, pharma fund, and technology funds. You might be asking, Kishore, now you told us the sector, the index fund, where to invest. But which company to choose? Which AMC should we invest in? Well, I see these three parameters. One is the assets under management, the AUM. How much crores, how much money or people have deployed through this particular AMC. That is like crores, like 1,000 crores, 2,000 crores, etc. That is AUM. Then the exit load. Suppose every mutual fund has a time limit, there is minimum time limit. Like 1 year you have to invest, minimum 2 years, minimum or 6 months or 1 month. So the exit load, if you are exiting before 1 year, how much fee you have to pay? So that I see. So the third one, the expense ratio. Obviously, the asset management company or the fund manager is managing a fund, so they obviously need a fee. It'll be like 0.3, 1%, 0.5. So this is the next these three parameters: the assets under management, the exit load, and the expense ratio. So by seeing this, I'll tell you that my favorite choices, like three choices for these mutual funds I mentioned before. Nifty 50 index fund. UTI's Nifty Index Fund and ICICI Prudential Nifty 50 Index Fund. These two are very good for Nifty 50 Index Fund. They are pretty good assets under management, pretty low expense ratio, and pretty low exit load also. So you can go for these. Next, pharma sector. So Nippon's Pharma Mutual Fund, Pharma Fund. This is one of Nippon's, very good one. Third, for technology, ICICI Prudential Technology Fund. So if you're in the 20s and almost nearing 30s, these three funds are very good funds. And the mentioned is these are my suggestions. I'm not a SEBI registered advisor. So again, watch and read more about these mutual funds and please invest. And trust me, when you see for 20 years down the lane, these are pretty safe. They're very good. And come on, we're just 25 and 30 years old. We can take a little bit risk to get more returns. Thank you. Bye bye. Take care.